Hi clients and friends, Mike Brady here. Just a quick video to let you know what I'm thinking about this week. And this week I'm thinking about sort of the news headlines about the kind of the steady erosion in the Dow and the stock markets, the equity markets over the last week and a half to 2 weeks. The momentum has certainly slowed. But is this something that you should freak out about? Completely sell all your stocks and this is the beginning of the end? I don't believe so. An official correction of the market is when you hit 10%, and we have not hit that. As of the recording of this video, it's down about 6.5% from its high. And you have to ask yourself if this is completely impacting your portfolio. Maybe you have too much in equities and stocks. So there's a good time to evaluate whether or not you're getting the full force of that, the extent of that decline. And if so, then you probably have too much in your too much equities in your portfolio. I do believe that diversification is a very key ingredient. The last couple of years we've had a pretty upwardly mobile market with a couple of declines here and there, most notably last summer in July, but pretty much it's been up, and so something like this seems to make great news headlines. I've been asked in the past if I think that gold is a good complement to your portfolio, and the answer is yes. Gold has had a huge rally over the last few years, and one of the reasons why, there's three reasons why I think it's going to continue to be attractive and a nice hedge, a nice part of your portfolio. Relatively small part, but a part of your portfolio. Number one is I think low real interest rates worldwide still make it attractive. I mean, real interest rate means what you're getting after the inflation. So if your rate of return is 5% and inflation is 4%, then your real rate of return is the difference, which is 1%. The second reason why gold is going to be attractive is some fiscal concerns highlighted in continued fiscal deficits. And so I think this is something that is a real concern and what makes gold a little bit more attractive. The third thing is just emerging market economics. It becomes, as emerging markets worldwide, globally, it becomes commodity driven. And people in those areas do want some gold and some protection against inflationary pressures. I think of, whenever you're looking at which asset class to go towards, whether or not it's stocks or bonds or gold or whatever it might be, it's like a beauty contest. It's not always what you think is the most beautiful, but you have to think about what everyone else thinks is the most beautiful. And I do think that gold is something that everyone finds very attractive, and so we always have to evaluate, do they still think it's attractive? And we have to be smarter than them about that. It's the same way with the momentum of the equity markets, the bond markets, whatever it might be. And so I think that this summer is going to be choppy as it relates to the equity and the stock markets. We'll continue to evaluate that. Do people, getting back to my analogy of the beauty contest, do people still think that it's attractive? But I think some of the profitability of the underlying balance sheets of corporations, etc., make it attractive to me, and I have to continue to watch to make sure that it's attractive for other people, to other people, if they're seeing it the same way that I'm seeing it. So anyway, those are my thoughts. That's it for this week. My name is Mike Brady. My company is Generosity Wealth Management. I am a kind of a holistic, comprehensive approach with clients with their financial well-being. Give me a call, 303-747-6455. I am a registered representative with Cambridge Investment Research. You have a wonderful week, and I'll talk to you next week. Bye-bye now.